I would, and I'm going to repeat this again. Part one of part two of the webinar. We can't get all this information today. Reading the market, crucial for trader success. Like a map in a highly digitized environment where our phone and GPS does all the work for us. If someone does not send us an address, it is very hard for us to get to those addresses. This is how the environment changes. Before it was all about street numbers, getting there, finding the next street, making turns, and you're at your destination. Now the maps are projecting, forecasting your time, when you're going to get there, how are you going to get there, what's the fastest and easiest route, and if you don't have that, you're not very happy. This is the best way I can use the analogy of reading the market. That's how important it is for traders to be able to at least accurately read the market. Now, are we always going to be able to read the market accurately? The answer is no. The answer is no, because that's what makes it random markets. That's what makes it random markets. And quite frankly, that's the art of trading. But if you can read the market accurately, that will give you confidence to trade the market. Otherwise, you're always going to trade in a fear, in a doubt. I'm sorry, let me just rewind that. You're always going to trade in a doubt that will then turn into a fear that will then cloud your judgment. So that said, let's let's look at this. That I put something together, just simple. I put something together. I'm gonna go here. Tell me, what is the answer? What is the answer here? Anybody? You see, take a look at the pattern. There are no key support resistance levels on this part of the chart. Is the final candlestick bearish or bullish? A, B, C, or none of the above? What do you guys think? All right, so we have Derek says B, bullish. Okay, so Fabio said it depends. And everybody else is B, but don't like the topping tail. So, and now see, here's what I'm saying. When you say don't like the don't when you say but don't like the topping tail, that's this is what I want you guys to think about. When we're talking about, hey, we just want to know, if this pattern is A, bearish, B, bullish, C, neutral. Think about that. Sorry about that. Let me just move this out. I did say I was downloading it. For some reason, it didn't download. So here's the answer. When you take a look at this, what information is available to us, right? What information is available to us? Breaking recent downtrend, prior's bar left. Okay. What else? Range expansion, all that. Okay, got it. All that. But when you take a look at when you really take a look at it, like I said, there's no support and resistance levels on this part of chart. Is the final candlestick bearish or bullish? You've got no support or resistance. The the question is the final candlestick bearish or bullish? That was it. That was it. That was the question. The reason I asked that, because so much information. So whoever says D, I mean whoever says B is right, because when there's so much information coming to you that at some time we just forget to pay attention what is most important, because the question was, is the final candlestick bullish or bearish? That's it. It's a what's the final candlestick? That's it. That was the only question. There was nothing else. We didn't talk about the pattern, didn't talk about anything. So the reason I'm setting this up for you guys, because I want you guys to understand there's so much information that comes to us that we sometimes we just forget to pay attention to what is most important. And that's it. That's it. Now think about this. To use candlestick trading techniques effectively, becoming a technically astute trader, is it really important for us to is it important for us to memorize as many patterns as humanly possible? What's the answer? It's true. Is it true or false? Thank you. I was hoping yeah, perfect, perfect. Yeah, that I was hoping everyone have the same answer, which you do, which you do. So thank you. That's it. Beautiful. So now let's proceed. Hopefully we're setting the stage. Then and every I'm gonna put together very short, or maybe two questions. So we set the stage. What are we gonna learn here? So now that we're all set up, now let's take a look at the markets. Oh, let's see if I love real tech. Our charts, the charts clarity is just amazing, especially for displaying purposes. I use it for my swing trading. So let's just see if it's gonna come up. Yep, it is coming up. All right, soon it comes up. I'll put it back up for you guys. But take a look at the markets, guys. Take a look at the markets. Lawrence, beautiful. Everybody's false good. But hopefully the first question, I'm hoping that we have set the stage with the first question and everyone understand where we headed with today's webinar. It's about attention to details. What is most important is when you get into trade, how much information you have, what information is most important at the moment for you. That's what's most important. All right. So with that said, let's get started here. I think my real tick is up and running. There you go. Boom. You guys can see it. It's working. Let me fix the screen. Look at the charts, how nice the charts are. So what do you guys prefer, real tick or trade station? I can do either or. I just have to adjust the screen. What do you guys prefer? This or this? Yeah, real tick charts are really nice. Now let me fix the screen. 1 second. So let me take this down. And as we're ready to look at the market, we've got a nice platform set up as far as what we're looking at. These are your cues right here. These are your cues right here. We already know what is going on with the cues. We already understand what's happening with the cues as far as the daily chart and what's going on with the weekly chart right here. So we already know what's happening. And I'm going to put the weekly chart right here so you guys can take a look at it. Market, weekly chart, we talked about the trend line. It's intact, right? And I'm going to talk about the macro trend line. The micro trend lines are your momentum trend lines, and we will talk about those as well. When you look at the market on the daily chart, what is happening with the market? That's what's most important. That's what's most important to understand. And then you have to understand, are all three markets in convergence? Are they all aligned together, or do we have divergence in the market? IWM, spiders, and Qs. Now, for me, I like to use spiders and I like to use IWM as a market barometer. You have to understand this. Spiders, S&P 500, IWM, your Russell 2000, Nasdaq, only 100 companies traded. So where are you going to make your decision? Somewhere right here. Spiders and IWM will be how you make your decision. Now you have to understand this is your Russell. Look at the divergence between Russell and the Qs. Russells and spiders looks the same. The Qs. So where I've been saying this for many days and many times. I said, listen, I personally believe that the Qs will eventually gonna play a catch up with Russells and 2000. Even when the market, even when the market, even when the market was bullish, both spiders and Qs, I said, if Russell doesn't go here, market's gonna have a hard time to go. Now let's take a look. This is what's happening. These are your Qs. I want to go back to spiders. Spiders, so very important. Trend line broken. 21 period moving average, downward, 50 period moving average, rolling over. So very important support level, both horizontal support and a trend line support, has been broken and broken significantly. You got a doji bar inside, and I shared that with you with my wide range bar plays, and I have a whole trading plan how to trade the wide range bar play. You had a continuation. A lot of folks thought, hey, market might be reversing. Go back to my last webinar, and I said, if the market breaks this level, this is a horizontal support right here. If the market breaks this level and fail to rally here, I like to play the market short. Okay, so now what's happening? Friday, market opens here into this area. I said, this is the area to watch in the market. If we take out this area, we may go here. If not, closing at the lows is going to set up a bearish open on Monday. Now, if the market comes back and fail to rally, I like to get short right here. Now, this could be an aggressive short right here once it breaks this area, because next level I'm looking at this. Why am I looking at this? Now you have to go look at the weekly chart and see what's going on with the weekly chart. Well, look at the weekly chart here. Weekly chart, this is what's happening this year. Matter of fact, we don't even need this weekly chart because you guys already understand what's happening here. This is your weekly chart right here. That's your trend line right here. That's your macro trend line. Macro trend line that shows you a macro view of the market and what's going on with the market. Your micro trend line shows you a recent view of the market. When you look at this monthly chart here, I mean, starting from here, that's it right here. That's your macro trend line on a monthly chart. Your micro trend line on a monthly chart will be just right here. So we're sitting right at trend line, because for that we go here on the daily chart. There is no way to draw a trend line here. How are you going to draw a trend line? This trend line? Well, I mean, it depends on what you want to do with trend line. You want to get too crazy with trend line, and however you draw it. The reason, and I didn't say this because I was saving this for ProWebinar. We have so many trials. I was saving this for the ProWebinar. The reason I gave this trend line so much credence, because not only this is your micro trend line, which tells you what's happening in the immediate term, it also reflecting a macro view on the daily chart. So right here you have convergence of two trend lines, and you have horizontal trend line that's supporting the market. Hence, this area becomes so very important. If you understand that, then you as a trader have to understand that this is going to be this right here, all the way here. Matter of fact, this is going to be the toughest area for traders to trade. That is when markets gets choppy. That's when you get the that's when the unwanted shakeouts, and that's when you get whipped around. Also in this area, those of you who like to swing trade, and I've lightened up my swing trades. I only have 2 open positions. One of them's Apple. Oil I'm still long. Oil I'm still long. I like oil. Oil I have a macro view on oil. Nor here, not there. But that's just me. This is what we need to understand. Where is the best place to trade on this chart? Hindsight 2020, I don't like to do that. It happened all this week. I spent, so hopefully this is now making sense. I'm hoping this is making sense. Right? All right, good. Where do we, now the trading's going to get better if we clear this area. We know where we're going. Trading's going to get better if it gets clear this area and we know where we're going. Otherwise, I promise you that 99.9% of the traders are playing guessing game. Now, can we find a pocket of, then can we find a pocket of successes? There is absolutely no secret to trading. There's no holy grail that will lead to riches. I promise you that. If anything, the real secret is learning to be aware of market conditions that that can then control your emotions and beliefs that cause you to abandon your own trading plan. Because I promise you, without looking at your trading results, the record keeping piece of it, that in this area, right here, we're talking about a couple, 3 weeks. I promise you that very high percentages of traders have broken their trading plan. The, the trick is therefore not in controlling, but in becoming aware of your environment and emotional reaction to the environment, and then understanding them. Most importantly, executing it. So that's market reading 101. That's how you read the market. What's a market view for what's a market view for Monday? How do we trade this market on Monday? I already said the way the market closed, the way the market closed on Friday. I don't control geopolitical news. But now if you're looking at this, we have a macro view. Nothing changes in the macro view, right? Nothing really changes in the macro view from from a weekly chart standpoint, even though we're getting closer. 210 will be testing this trend line on the weekly chart. We're getting closer, even though nothing changes on the weekly chart. Shorter time frame telling us that there is some discomfort among the power group, and that's being the bulls. Have we traded against the bulls? No, not we, not us. We have not traded against the bulls. We want to be with the group that is in power. That is exactly what it is. Now, you're right, at 9:05. Now we have 25 minutes. There is no way that you can build your bias in 25 minutes, right? Or even communicate your market bias effectively in great details in 25 minutes, because we're doing this for about 27, 28 minutes on the recorder, 31 minutes on the recorder. And we have just started to diagnose the little pieces that makes market bias. Me personally, I'm up at 4:45. That's my time. I'm in front of my computer at 5. That's why the class that I wrote for the traders, Trading the Open, we're going to get started at 5:30 my time, 8:30 market time, and we're going to go all the way up till almost up to 11 o'clock. We're going to trade together 5 days live It's like a live mentorship. And we're going to talk about this. We're going to build the market bias. We're going to build the trading plan. We're going to build the gap list together. So that's what you need in 30 minutes. It has to be a 2-minute drill. You're quarterbacking at 9:05. It's fourth and goal with 20 seconds left. You got to go to the market. You got to convey your gap list and a little bit of your trading plan. So that's the market bias. Now in the market, where are we seeing at the moment? Where are we seeing? Let's just talk about this. Where are we seeing? And then as the weekend comes around, weekend for you guys, near trader or not, what I like to see from you guys on the weekend, you do a market scan and you do daily and the weekly chart scan. You guys know I'm a very big believer of the weekly chart. Matter of fact, some of my better trades come from weekly charts. Then you look at where we have success. Is it in financials? I don't know, not right now. Is it the energy? Well, we'll see, because energy is still above the 21 and the 50, so we'll see whether it's the energy. You know, where is it coming from? Sorry. What's happening here? Get my data updated. That would be nice. Oh, this one's working. All right. So convenience of two platforms. There you go. All right, here we go. Oh, there you go. Back up and running. Sorry about that. All right. So then you got to go into and look at the sectors where we have, where do we have strength? Do you see any strength right now? Really look at the biotech sector, right? Yes. Are you watch? Are there any sector rotation? Well, I mean, right now everything is kind of rolling over. You've got three sectors that everybody's got to watch. XLE, your energy, XLF, your financials, IBB, your biotech. I mean, you can do, you can do housing, home builders, they're rolling over, but you gotta watch the sector and see if we have any relative strength. I don't see any relative strength anywhere at the moment. Now, a couple things that showing some strength are these. This is my favorite. So from the this is my favorite, and I am getting long here. This is what I like to see. This is my favorite. Now, this is what you want it when you look at the market. Look at this. Stage 4, stage 3, another stage 4, small stage 1 here, rallied, took out the highs, came back, rested on the moving averages. Now this is an opportunity box. That's what I call it. This is your micro trend line converging with horizontal support and resistance, and now it's in the box of opportunity because you've broken the downtrend here. You've broken the downtrend. You kind of retested here, holding, and now it's looking higher. One stock that shows up right away. That is my favorite, FSLR. Love this. Yeah, it is flagging. You're absolutely right. It is flagging and looks really good. So that said, we talked about this. If I can get this right. There you go. All right. So this is what we're so what we've discussed so far is how to prepare our market bias. Because without the market bias, it is very tough to do anything. Now, what I want to talk about is trading your plan versus planning your trade. And that is predicated upon how well you understand the market. And why not to analyze your way into a trade? That's why I pulled up that quiz. How much information you are getting. How much information are you getting? That's important. Identify your strategy or strategies. I think we're going to discuss two today. We're going to have time for two. The next part two of this webinar, we're going to talk about, I want you to come prepared and let's talk about how you have identified your strategies. And then we're going to talk about writing a tactical entry plan for that strategy. And then I will personally share examples of my trading plan and my experiences. And we talked about this already. The market has three directions, right? It can move at any time. That's it, given a trader basic success odds of 33%. Then why 92% of the traders fail? 1 second, please. All right, picking up where we left off. If market can only go three directions, and that's a question. Why 92% of the traders fail? Because I personally feel if the market can only go three directions, it should give a trader a basic success odds of 33%, and yet we don't have traders that are successfully winning 33%. You know why? Because they tend to overanalyze. They don't listen to the basic fundamentals. You are going to have a very, very tough time if the basic infrastructure is flawed. Market goes three-way, it should give a 33% chance. This is right. You know what's the biggest fallacy? The market goes sideways, up and down. No, market only go two directions. It goes up, it goes down, because when it goes sideways, it takes everybody with it. Sideways is just the time when the market is waiting to make another move. That makes sense. And and I understand that there can be unanticipated variable that contribute to market movements, so news, geopolitical, elections, so on and so forth. And even with the best analysis, even with the best analysis, the best technically astute trader could be surprised when something extraordinary happen in the market. In other words, oftentimes the markets will surprise us and not to do what appears to be probable. And we play the probability. Those of you who read the book of the trading in the zone, um, Mark Douglas, right? Those of you who read his book, that's where this is. I'm just in thinking about this. That's what he talked about. Each trade is unique and independent from every other trade. And then it makes sense because even if you're using the same strategy, each trade is unique. So what do? We bring some new empowering beliefs. And that's where we run into some issues, because when I say if the market has if the market has 33 if market gives the trader 33% odds of winning, then why 92% fail? Yeah, great book. Why 92% fail? Because 92%. Here's here's a good news, by the way. 92% fail, 8% become successful. And the reason I say 92 and 8, because I think 80% fail, the rest 10% really struggle. It it's really the 8% that are trading for living, putting their kids to school, paying for their car note, mortgage, making living from trading. Yep, that they had something like that. So I just I kind of rephrase that, paraphrase what he said. That's the 8%. Those you know, those of you, actually a couple of you or some of you have traded with me in my house. So you guys know this is all I do, and I have no problem inviting someone to my house to trade with me as long as I talk to them and interview them that they are going to be successful and they're serious about trading, because you're going to come to my house, you're going to meet my family, my dogs, everything, right? So become part of my family. And then your success becomes important to me. And because I do this for a living, because I've been doing this, I have no problem. I don't hide behind the computer. I said, this is who I am. Come see me. I don't need to plaster my face on internet. I don't need this. I do it out of passion of helping other, because what I do believe that it can be done. Yeah, no, that's true. I don't need to plaster my face on the internet. I don't. I really don't. I'm a very private person, but at the same time, I am very open when you come and meet me in person. And those of you who met me at the mentorship probably know I'm a very private person. Don't need internet to market me. Matter of fact, don't need to market. It's just I like to market. I let my skill set market me. So anyways, let's get back to this. 92% fail because they trade like gamblers. Thanks, Polar Hawk. And Polar Hawk and I spent a week at my house, and we, became a family every day. It was fun. It was great. So stop trading like a gambler. And I say that all the time. You gotta cut all noise. Trading like a gambler. That if you basically if you lose something, hey, I'm gonna double down instead of saying, okay, let me take a step back and see what I can do. The trade the trader who trade like a gambler truly believe that every trade has the same outcome. Hey, if I don't win this, I'll win the next one. So that's it. And we got to start trading like a casino owner. And I don't want to get into details of casino owners. You guys already know the house always have the better chance of winning. Most importantly, guys, we got to start owning the outcome. And I'm going to talk about a little bit more. Your future, your future consistent trading results. Consistent trading results is in direct proportion to the amount of uncertainty you can comfortably handle. That's that. And what I mean by uncertainty you can uncomfortably handle, the trader who will be successful, that will say, I understand, right? For example, I understand Goldman Sachs is a good gap. It gapped over this, right? Gapped over this, almost right here. Took the trade and came all the way back. And instead of saying, oh, it'll go back, say no. This is my plan. This is what I'm gonna do. And if it stops me out of break even, I'm done. The same that I'm talking about me, the trader is me basically. The same trader who also understand that even though we have tremendous shock value here in Infi, this gonna have a very tough time breaking this area because it is a major level of support on this chart. That is why it's so important for you to understand your technical analysis and also manage your expectations. While I understand that you want 2 R's every trade, but what is that thing? It's 2R. I really struggle with that when people preach, hey, put a trading plan together. If you don't get a 2R, you never be successful. It's a bullshit. I can literally trade. There is no scarcity in day trading. But managing your expectation, it's a big darn deal. If you manage your expectations right, you truly understand, and that's why we're going to talk about the trading plan. Why, if you are prisoner to your own trading plan, I am sorry, it's going to be a very tough business for you. Instead of changing with the environment. I mean, seriously, think about this. Instagram, Snapchat, they are changing the way people view photos. If you're doing an Instagram or Snapchat, you cannot even use a computer. You have to use a handheld smartphone. Smartphone has to be a smartphone, not any phone, a smartphone. Those that refuse to use a smartphone, sorry, but this cannot work for you. If you want access to that, then you must have a smartphone. Expectations, managing your expectations. If you continue to manage your expectations as you're living in 1999, your results will be just 1999. You have to advance your understanding with your expectations and many gaps. I mean, this month and last month I think I did 10 hours. I didn't do very good. I mean, okay. 10 hours, okay. I mean, I don't, it really, it's over time this year. What would happen as the earning season heat up, I'm gonna make up some of the lost ground. This is truly, I promise you, those of you who used, I hope some of you may not. Some of you are just doing this part time and want to learn before you truly get into it full time, and I totally respect that. But if you're doing this full time, I hope that every single one of you have some type of LLC. You know, I'm Iceman 7 LLC, for example. If you own this as a business, then you have business plan together and you understand what's going to happen. Not every business is going to be profitable. Sometimes you don't take out your salary because that's a time that you just have to reinvest, and reinvesting means reinvesting your time. So what do you trade in the morning? What's your trading wheel looks like? Do you have, is it clearly defined, or do you have a leak in your trading wheel that's sucking the air out of it? So if it's my expectations are really this. Listen, the more you simplify a very complex environment, the better you're going to be. On this chart, for example, just I don't know what it is. This is Infi. Let's just start drawing some trend lines. Here's one, right? Now we got a horizontal support. Got a downtrend line right here. Broke the downtrend line. Got everyone bullish. Stock is bullish, going up. Let's buy some more. Today is gap down. What is the trend line going to do other than just the matter of a reference point? Isn't candlestick, this is exactly what we started this pro webinar this morning. The last candlestick, is that bullish or bearish? Not the one that on happened Friday, but Thursday. The answer, and I'll say that the answer is it's bullish. That's simple as that. The answer, it's bullish. The last candlestick that we started on Thursday was bullish. So that's it. Everything else is irrelevant. So you have to really sit down and say, okay, do I understand the bigger picture? Sometime, and most of the time, everyone's you kind of have to take a step back and say, okay, what is this? Is this chart telling me that it is for me to get long or short? And just because it has a tremendous shock value, will this give me opportunity to short? That's the answer that you have to collect. But I am telling you that if you understand technical analysis and you gather your results based on your analysis and your analysis only, things will change forever to come. Cisco, micro trend line, broken. It's sitting right at the macro trend line here. Micro trend line, broken. Macro trend line, that's where it stopped. Think about this. Coming after big red bar. Did this produce? Yeah, it went down here, right in there, right in here. Alta, that's the only miss. I wish I just did not miss. This is, guys, this honestly, this is the best gap we had probably all month. I cannot believe this. I mean, I had some, since Charter merged with, became Spectrum with Time Warner and stuff like that. It's been horrible. Like my internet's just, and I pay $100 per month, and I'm not lamenting over the internet issues. And nor do I want, nor do I need to, nor do I want to commiserate It's not that. There's nothing. But I'm saying that this it even motivates me more. It even motivates me more that, hey, this is what I want to see. This is such a beautiful gap. And it gives entry on every time frame known to mankind. 5, 15, 35, 75, I don't know, whatever you guys use, whatever anybody use, it gives you entry. Don't even have to, I mean, I just want to keep the daily chart there so you guys can see it, but look at this entry. Look at this 3 bar play on a 15 minute. Boom, right here. It was amazing gap. That's all I'm going to tell you, and it's just shame that I was not able to get in it twice. Boom, beautiful gap. And this may have some more room because it hasn't done anything. And then understanding, where we putting red bar versus green bar, how far we're penetrating into the green bar, and how is it impacting a longer term view. Do Netflix. This is you can say this is the daily buy setup, a very sloppy daily buy setup. I like this a weekly chart a little bit on the Netflix, but this is what's happening on Netflix. Until it breaks this, it's going to be very tough for Netflix. But you can watch this. Netflix is a good watch. Netflix is a good watch. Banks sold off. Every single one of them sold off. NVIDIA is a nice daily buy setup. The difference between NVIDIA and Netflix is very clear. Rising moving averages, got a bottoming tail, changing of the guard bar. Good long idea here, NVIDIA. So, what questions you guys have? Because next webinar, we're going to go into choosing your strategy to align with your trading plan. And in that, we're going to talk about what is your strategy or edge? Are you able to? And I think I like to have either one or two come on the mic and talk about it because I want to see, are you able to? And before I'm giving you a rough draft. And listen, if it was accountability piece is huge in trading, and no one's gonna hold you accountable if you do this or don't do this kind of homework type of thing. But what is most important? Are you able to articulate your strategy or your edge in a sentence? This is what my edge, and this is how, and this is why. It has to be clear and concise. And it's that your strategy is not and cannot be the vehicle you use, such as option stocks, forex. And your strategy should not be, cannot be complex. That's very important. You're in other words, guys, your strategy is your edge. That is your edge. And I'll give you examples so we'll be ready. Yeah, Johnny, let me send me an email, j@livetraders.com. I think I'll send you. I might have the very last one that we did. I might have it here. I might have it here. So this is the link for what we did on the 17th. So here's the link for the 17th of September. That's the link. But I'm going to give you defining your strategy. I'm going to give you a strategy example. I'm a gap trader. That's And what in that then you put your strategies for the gap trader. I'm a trend trader. I'm a counter trend trader. I like to trade parabolics. And once you have your strategy defined, what is your edge? Gap trading is my edge, and this is why I excel in gap trading. So these are some of the examples of strategies. Oh, thank you, WOJ. Yeah, I take a lot of pride in these webinars. I do. I've already decided that we're going to spend an hour together. And now that we've already decided that we're going to spend an hour together, I mean, obviously it takes it takes more than an hour to prepare, to get the material together. I put my thoughts together, what I want to talk about, and oh, thank you. And I want to put together something that is tangible. And I start with three things, and I recommend you guys do the same. And I've learned this from my mentor. Everything in life that you do should have a purpose, process, and payoff. Purpose for the ProWebinar is to make you a more informed trader. Only you can make yourself a great trader. I can only make you informed trader through coaching. Otherwise, everyone will become a Kobe Bryant if only Phil Jackson coaches them. That's not it. He became the great basketball player because he wanted to be great. Phil Jackson helped him along the way. That's my purpose. Process for us to spend time together, go over the game plan, a playbook that we both understand and have mutual respect for the market. And payoff, to me, it's a success, not prosperity. I see success is, to me, having success in life is a sign of prosperity, not money. Not everyone with money is successful. I want, I personally want to be successful in life. Personal life, at home, professional life, and what I do for a living. So on that note, I'd like to end today's webinar. Unless you guys have any questions. And I look forward for sure, Polar, for sure. Thank you. Thank you. I appreciate the kind comments. I appreciate the attendance, your time, your participation, and I look forward to continue to work with you and make you an informed, consistently profitable trader to a point you say, I can do a pro webinar. So Jay, it's my turn to do a pro webinar. You can take a weekend off. That'll be awesome. That will be awesome. All right. Have a great weekend, guys. My Dodgers are in playoffs since Lakers didn't make it. Dodgers, Cubs. Man, that's a tough one. I mean, I like the Cubs too. Dodgers, Cubs, American leagues. Baseball's fun this time around. A lot of good football today and tomorrow. Trading's great. Have a great weekend. I will talk to you guys on Monday. Thanks, everyone.